Sydney property prices have soared over the past financial year, incredibly increasing by far more than the average annual salary.
And the prospect of another rate rise is doing little to cool the market, defying the hopes of first home buyers.
Housing, once considered a fundamental human right and essential for personal and community well-being, has increasingly been transformed into a financial asset. This shift is particularly evident in Australia, where policy decisions, economic pressures, and cultural shifts have redefined the role of housing in society. Instead of serving as a basic necessity, a place to live, grow, and build a life, housing has become a commodity for speculation and profit. In this video, I will explore the factors contributing to this transformation, the impact on Australian society, and the broader implications for housing as a fundamental human need. The shift from shelter to asset. Historically, housing was primarily viewed as a shelter, a place of safety, stability, and personal investment for families. However, over the past few decades, housing in Australia has increasingly been commodified. This transformation can be traced to several interrelated factors. One significant factor is the financialization of housing. As observed in the per capita report on housing affordability, financial markets have increasingly treated housing as an investment vehicle. Policies that deregulate housing markets, coupled with tax incentives for property investors, have encouraged the view of housing as a means to generate wealth rather than a social good. For instance, how successive governments have enacted policies that favour investors. This started inflating property values and making home ownership more challenging for first-time buyers. Also, investor tax breaks have played a pivotal role in this shift. Tax incentives such as negative gearing and capital gains tax discounts have turned housing into an attractive asset for investors. These policies enable property owners to deduct losses on their investment properties against other income, creating a system where owning multiple properties is not only a viable but also highly profitable venture. This has led to a surge in property investments, pushing prices beyond the reach of many ordinary Australians. Societal impacts. The commodification of housing has had a profound effect on Australian society.
So folks can't sell it in silence here this afternoon.
But silent is exactly how first home buyers are staying in a competitive market with limited stock.
Challenging and emotional, I guess, getting your hopes up on one place and kind of getting knockbacks time and time again.
One of the most significant consequences is the increasing gap between those who own property and those who do not. This transformation of housing into financial asset has fueled a speculative property market, driving up prices and making it increasingly difficult for young and low-income Australians to afford homes. This has created a generation of renters who are locked out of the property market, contributing to growing inequality. Also, this shift has led to housing insecurity. As housing becomes more expensive, rental markets have also become less affordable. This situation is exacerbated by the fact that many investors purchase properties not to rent them out at affordable rates, but to benefit from capital appreciation. Research points out that these market dynamics have resulted in younger generations facing significant challenges in securing stable housing, further entrenching social inequalities. Public policy has also been skewed to support this investment-driven approach to housing. Government resources that could be allocated to public and affordable housing are instead often used to subsidise the private property market. For example, the University of Sydney raises the issue of whether excessive wealth and asset ownership should be capped to address the housing crisis, suggesting that current policies disproportionately benefit the wealthy at the expense of the broader population. Broader implications. The transformation of housing into a financial asset rather than a shelter has broader implications for Australian society and beyond. UNSW's City Futures Research Centre highlights that housing now comprises a substantial part of household wealth in Australia, which links personal financial stability closely to the volatile property market. This situation not only increases economic vulnerability, but also distorts priorities, with investment decisions often driven more by potential financial returns rather than by the need to provide safe, secure housing. Furthermore, the focus on housing as an investment undermines efforts to treat housing as a human right. Research emphasises that public housing in Australia has been vastly under-resourced, with government policies favouring market-based solutions over direct intervention in providing affordable housing. This trend threatens to erode the concept of housing as a social good, leaving many Australians vulnerable to the whims of the market. The shift in Australia from viewing housing as shelter to seeing it as an investment has profound social, economic, and ethical implications. While it has generated wealth for a segment of the population, it has also exacerbated inequalities, reduced housing affordability, and increased insecurity for many Australians. To address these issues, there must be a re-evaluation of housing policies to restore the balance between housing as a basic human need and as an economic asset. Without such changes, the dream of home ownership will remain out of reach for many, and the social fabric of Australian society will continue to fray. Well, that's all for today's video. Thanks for watching, and I'll see you on the next one. Peace.